Hello and welcome to the Stock Planner channel. Today I'm going to talk about 3 stocks that I feel have been beaten down and are about to turn around. These stocks are very popular and very tradable. The Stock Planner channel is an education channel. We're swing traders. We're sharing our ideas. We have a Discord chat. Please check us out. We do our own due diligence. We make our own trades. We learn it. We paper trade it, and we win for life. Let's get started. 3 beaten down stocks to add to your watch list or to trade. They look promising. Well, the first underperforming stock I'd like to talk about is FedEx. The last 7 days, it went down 3.2%, currently trading at $221, with a market cap of $55 billion. It's a transportation service company, delivers packages all over the United States and internationally. Earnings are forecast to grow by 15%, and this pays a dividend of 2.2%. The profit margins are a little lower than last year. This is a snowflake. You can tell a lot by the snowflake. The health of the company is fairly good. It pays a dividend. It's not a very good value at the moment. It's not terribly undervalued. And the future does look okay. These are the competitors: UPS, C.H. Robinson. These two are the ones I trade. And you can see over the last year, or last 8 months or so, it's been going up. But the last week or so, we've had that drop. There's an article written recently. It's now the time to start to look at buying FedEx. And basically the article states that this is a fairly good company. It has some interesting growth prospects, especially fueled by the growing e-commerce opportunities and international shipping sectors, although they do have a lot of competition. And they had a good third quarter earnings, even though the revenues are slightly lagging behind. $22 billion, down 6%. Looking at the trading view chart on the daily time frame for FedEx, you can see that a while back we had earnings. That was your third quarter earnings, and when this price jumped up, and for the next 2 weeks the stock continued to rise. Now we seem to be leveling off a little bit. One could see maybe a level of support here, and maybe it'll bounce off that level of support and go up. The technicals are still showing a sell. Your MACD is showing down, and of course the RSI is showing down, but it is in the oversold condition, and this is why I'm talking about this. Normally when it gets down below the 30, you start looking for it maybe to come back around over the 30, and that might be bullish. The analysts that cover this are saying this is a buy, and they have a price target of 256. 256 is up in the area here. This is for the year. Now I'm cautious about the debt ceiling limit fiasco that's going on now, but if they get that worked out and confidence comes back into the market, I'd be looking for a long. FedEx had a bad week, but I have a feeling it'll bounce back. And you can see this is sort of in a channel. Maybe the channel's down a little lower. Anyway, I think it'll go back up to at least that, which is 234, 233, somewhere in that area. But I want to point out that this is the RSI, and these are the oversold situations, and now we have that situation occurring now. And every time you had that, this stock rose a bit, and maybe that same thing will occur. This is the MACD, and these are little buy crossovers, and you could say the same thing for that indicator. It rose up a little bit. So you'll find out if you're a beginner that it doesn't matter sometimes what indicators. You just got to pick a couple and become familiar with it. This is the TTM squeeze, and these indicators I really didn't know nothing to. The only thing is about the RSI, I made it 4 instead of 14. But if you look at this, this is a momentum indicator. When the momentum seems to be to the upside, it starts going up the upside here to here. That's a good time to trade as well. That's TTM squeeze. And then when it starts fading, if you're in, maybe get out. and that the momentum is still down. You might want to wait till the momentum switches around. If you're a beginner, you should be marking up your charts. Let's go on to the next one. FedEx. I think it's going to go up. Well, the next stock is Walt Disney Company, ticker symbol DIS. It's trading at about $91, a market cap of $165 billion. That's a big company. Into a lot of things, but mostly entertainment. Last 7 days, 11%. And this has probably happened because of people didn't like the earnings report. In 1 year, the last year, it hasn't been so good either. And I think people are starting to get out to the parks and things like that, but there's been a lot of controversy in the news, the wokeism and Disney World losing its tax status. There's lots of issues. But this stock is trading at 31% below the estimate of fair value. That's cool. Earnings are forecast to grow by 30%. That's really cool. And earnings grew by 51% over the past year. And that most analysts agree that the price will rise 35%. Wow. The health of this company is fairly good. The future looks bright, and right now it's undervalued. Netflix is a peer, Warner Music, and I only trade Netflix. This is normally a good swinging stock, and this analyst believes it's now time to look at Walt Disney. Looking at the trading view chart and doing a little technical analysis. That was the fundamental analysis we just did. Now we're doing a little technical. It wasn't great fundamental, but good enough. All you have to do is good enough. You need to know what you're trading. You just can't look at a chart. You have to know what you're doing. The technicals, according to TradingView, it says it's not so hot. And you can see that. Well, it's looking at the chart, it's not so hot. There's your earnings. And you had that big gap. Normally when you see a gap like that, it fills. But the analysts that are covering this see this as a buy, and with a 1 year price target of 122. That is way up there. 122 is up here. Gap there. Normally going to fill the gap. Is there a level of support? Is there a level of support there? And possibly here? If there is, maybe it could go up. The stock could go up. The reason why we're talking about it is that the RSI is in its oversold issue. The MACD is below the zero line. That's why I normally look for longs. This is a TTM squeeze, but it's still strong. The momentum is still down on this. A TTM squeeze, when momentum is increasing, you see this kind of thing. When it's decreasing, you see this kind of situation. When it's increasing, you see this. Decreasing, you see that. And now it's still decreasing, but when you might want to watch for TTM to go increase the momentum again to the upside, upward momentum. RSI, when it's below zero, I usually wait till it comes back around like this, and it hasn't come back around, but right now the RSI is saying up. RSI up, here up, and it came back around right there. That's perfectly to the. And how about this one there? And these aren't far behind. This is the MACD crossovers. Those are not far behind. You're just going to find the indicator you like to use. They're all virtually the same. They're all lagging indicators. So you just, once you've chosen it, 1 or 2 or 3, and they line up, you might be a day early or a day late, but that's what happens with lagging indicators. So I'm starting to see that maybe Disney might be time for a buy. What do you think? Leave a comment below. By the way, I wouldn't take these trades or follow and copy these trades. You need to do your analysis yourself, develop your own system. And once you did that, you can do this for yourself and win. Now, what I would do is look at Disney with your indicators and do these little lines. I'm hoping these little lines help. You might call this back testing. Anyway, the goal is to find indicators that work for you, and then develop your own system, and then win. Not always. I try to win about 50%. Here's another beaten down stock this past week, beaten down by 7 or 8%. And the year outlook did not look that well either. 23% for the year, 24%. The last price of this is $60. Has a market cap of $70 billion. Payments, online payments, trading at 29% below fair value, so it's undervalued. That's cool. Earnings are forecast to grow by 15%. That's pretty neat too. When you look at the snowflake, you want it big and green. This is not, but the future does look bright for this company. It's fairly healthy and it offers some value. It doesn't pay a dividend. And these are the competitors, according to Simply Wall Street, and I trade none of them. I trade Visa, but not MasterCard. And here's that downward slide. On May 14th, investor sentiment deteriorates as stock falls 18%. Wow. Taking a look at trading, oh my gosh, look, there's your 18%. That's pretty much a slide. Well, we hope this might be support. I don't know that. There's a support line here and was doing pretty good for a few weeks, about a week ago, 2 weeks. We're looking at the daily time frame, so each one of these bars is a day's worth of data. And this is your RSI, and I like to draw little circles to see, and do it blindly too, to see where, if I want to go long, I want to draw the long. If I want to go short, I'll draw the circles on the top. And that RSI, that paid off. That RSI was a little early, but yeah, eventually, if you were pretty good. This one, I don't think that was a winner. And of course, then you had this big hit, and some people would think, hey, we have no place to go but up. Momentum is still down, but this is a little purple, lighter color, so it looks like it's switching around. Momentum's fading. The technicals say sell, of course they do, but the analysts are believers, and they say buy. And they think it's going to go to $94, which is way up here. According to TradingView, that's a 56% bump. I'm a little more short term, and so, but I do believe that over the next 2 months, PayPal is going up. I see nothing in the fundamentals that prevent it, other than people were not happy with the earnings. So what do you think? Is this stock going up or down? Please leave a comment below. Before I go, I want to talk to you and direct you to our free Discord. And we also have a premium level as well, where we give lots of trade ideas. This is on the free level. Bido is looking like we're in a trend up, and the indicators all say trend up. This is an ETF, utilities, and that looks like it's ready to pop up. Delta Airlines, the RSI says go up, the stochastic says go up, and the MACD, it's the same MACD that I'm using over, all these are the same. NVIDIA, in a long trend up. Walmart looks like it's coming down, and some others to look at, some other trade lists. So it's worthwhile to check us out on Discord. Well, that's all I've had for you. Make sure you do your own due diligence. Trading is risky, but it can be profitable. We're swing traders. We're trying to capture the bottoms and the tops and the trend reversals, and then capture the trend in between. Once you pick a top or a bottom, you're trying to pick the trend and profit with the trend in between those tops and bottoms. Anyway, happy trading. Today was a down day. The NASDAQ was up most of the day, but then it started faltering at the end of the day. Happy trading. We'll catch you on the flip.